Hi, everyone. Welcome to the Inside Story podcast, where we take you behind the scenes of building diverse businesses and becoming a successful entrepreneur. I'm your host, Dursun Halimova, a business coach and facilitator on a mission to help build impactful businesses. And today I'm super excited because we will have, in a way, an unusual conversation because my guest today is Daniel Biedermann, who is an investment partner at New Space Capital, which is a Luxembourg-based private equity firm. And they invest in growth stage deep tech companies that solve global challenges of sustainable economic as well as social development. Daniel has extensive experience in the space sector in general, but as well in space investment and strategy. So it will be quite an exciting conversation today to hear Daniel's perspective on building a business because he brings more of an outsider, more of an independent view, having had the experience to coach, mentor, and sit on the board of many startups. So, Daniel, it's great to have you on the Inside Story podcast. Welcome.
Thank you. Thank you, Dursan, for having me. A pleasure to be here. And obviously, I'm happy to share my experience. And I hope I can help many entrepreneurs to do a better business.
Yeah, indeed. We're looking forward to that. And also, maybe if you can give a little bit of tips in terms of raising funds, which is, I think, always a hot topic among startup
Absolutely.
entrepreneurs. Yeah. To
Absolutely.
start off, I have this tradition where I read unfinished sentences and I ask you to
Okay.
finish them for us, please. The first one, being an entrepreneur means
Being an entrepreneur means being a risk taker, but also a carer.
building an impactful business requires.
A lot of stamina, perseverance, and vision.
Failure is.
Part of the deal.
Hmm. Hopefully a good deal, huh? A good funding deal.
No, but failure means learning. If you learn from the failures, then I think it's not a bad thing.
Yeah, no, I couldn't agree more. Success is a result of.
A lot of hard work, good relations, and a bit of luck.
And the last one, being fulfilled in life means.
A good balance between work, friends, family, enjoyment. I think this is all part of a good life.
Great. Thank you, Daniel, for sharing those insights. I also wanted to maybe start our conversation focusing in general around the topic of space, right? I think in the last 5 or 10 years, space development have brought to us a lot of unprecedented innovation and investment, with the rise also of private companies reshaping how we approach everything from satellite launches to deep space missions. And in 2022, for example, the space market was valued at 400 billion euros with the potential to grow to over a trillion by 2040. And where we are both based in Luxembourg, I think the space sector has also become such an important sector. There is an increasing interest, increasing focus and priority from the government of Luxembourg to invest in the sector and support also startup ecosystems working in the space. And as well as you have an extensive experience working in the space. You have also an academic background in aerospace engineering, complemented with business education. Having worked extensively both with established space companies and scale-ups, what do you see as the biggest opportunity in the space sector today? What is possible now that seemed out of reach a decade ago?
Yeah, very good question, Dusan. Well, I think many years ago, space was really the privilege of governments or space agencies, simply because space activities were and still are very complicated and complex. But I think what has changed is the developments on the technology front, which has made it much more affordable for smaller businesses, private ventures to start thinking about space activities. So, and that goes from the way satellites are built, the way the components are developed, and what's feasible basically with miniaturizations and technology involvement. But I think one major effect also is the launch costs that have come down dramatically compared to 10, 15 years ago. And so, first of all, as I said, it's a budget question. Secondly, I would also say that it was a push from, maybe it started in the US, in the Silicon Valley, where basically the entrepreneurs that were more related to the ICT sector all of a sudden found space an interesting topic to work with. And that has created startups, that has created appetite on the investment side to actually see what could be done, what's possible, what's feasible. So that was a sort of a new enthusiasm about space that was maybe fading away a little bit. And it's not it's not a surprise to say that there's people like Jeff Bezos, Elon Musk, Richard Branson. They all have sort of contributed to that positive hype about space. And then last but not least, I think there's also increasingly a need for space related activity, be it for communication, be it for Earth observation, for navigation, climate watch, weather forecasts, and you name it. A lot of people take these things for granted now, but there are space activities behind that, and that creates opportunities for businesses, not only on the government side, but also increasingly on the commercial side.
Indeed, yeah. I recently interviewed, and the episode is out actually, Guy Schumann, who is the founder and CEO of RSS Hydro. For example, in their case, it's a research based startup, and they use data from space to be able to predict and hopefully eventually avoid
Yeah,
water related issues, especially
issues.
in
Yeah.
the humanitarian sector as well. Yeah. So I think the space has, as you pointed out, right, evolved so much in the recent years. We started also experiencing more of the benefits, be it better communication or disaster risk prevention.
Yeah, a lot of the climate change effects that we now talk about and see is actually only possible thanks to space. Because
Hmm.
with space, you have a global view of things, and you can actually put things together. Before that was not possible. A lot of weather stations, they were very local. The effects of temperature rise or floods were only felt at the local level. If you can see and observe that from space, you actually get a much wider picture, and you can feed into the models and to see what happens about the global effect and the warming effect of the atmosphere. All that would not be possible without space.
Indeed. And you have worked extensively. You have a very rich career background in the space sector. And somewhat recently, you have joined as a partner at the New Space Capital, which is a private equity firm. And you have so far invested in over 5 scale-ups in the
Yeah,
space sector.
just the
And
sixth one recently.
okay, congratulations. Okay, good. And assuming that the scale ups that you talk to, right? And just so also maybe to clarify for our audience, in our earlier conversation, you were talking about go, no go filters when looking and evaluating scale ups, if they are worth your time to actually look and consider them seriously for the investment, right?
Mhm.
And so you have these kind of preliminary checks, which most investors, I think, do also to save time, right? Energy. Assuming that given scale up passes that kind of initial filter of go no go, what is the second stage filter? And I'm assuming more kind of a serious filter, right? If you will. What are the key elements the scale ups have to have in order for you to move ahead and seriously consider in investing in them?
Yeah, maybe before going there, I open a little parenthesis to say, just for the audience also to understand. Typically, we look at technology maturity, the product market fit. So, is the company really market driven? Then the execution. So, that's sort of the three filters that we really apply for all of them. And once we go then to the second stage, as you said, Rusan, it's about scale up. And scale up to for us means are the operational procedures ready to actually execute and scale? Is the team ready to go to the next stage of their development? Have they identified gaps, for instance, that they need to fulfill or to fill, or are they sort of flying blind? And that would be sort of an indicator for us that maybe they're not ready for that yet. The governance, are they looking at ESG? What are the past financials? How do they report? Once we get to that scale up stage, we start to see companies that maybe a couple of years down the road will go to the stock exchange or will go to an exit to a corporate organization, and they need to get ready for this. And so it's first and foremost also an awareness campaign of some sort, that they know what's coming next. We also look very much at mismatches between the business plan that is presented to us and the actual capabilities. So what I've seen in the past was situations where the business plan says, oh, next year we will build 500 units, and then the year afterwards 2,000 units. And then you say, but your production capabilities can only do 200. So there's a mismatch there. You can't fulfill actually your business plan. And so those are sort of critical filters that we are applying. Technology is for us a sort of, if I use consultancy jargon, it's a right to play, but it's not a right to win. So the right to win actually comes with these execution capabilities, understanding the market, understanding the customers, and actually digging deeper and deeper. So yeah, so this balance between technology innovation and market innovation is important for me, and then everything that goes around the execution, because we are at a stage where execution becomes important, generating revenues is important, and the credibility of that revenue buildup is important.
Yeah, basically at that stage, I'm assuming you already expect the founders to be able to replicate what they have done in the initial stage much faster and at much larger scale, right? And then having those processes, effective processes set up, then really kind of, yeah, it can basically determine if you succeed or fail, right? If you are able to efficiently, cost efficiently also to
Indeed,
execute.
indeed.
Yeah. And are there any deal breakers when it comes to evaluating scale ups when deciding if to invest or not? For example, some of the investors I've spoken to, for them, the red flag is if it's only one founder. And the argument is that it's just lonely journey. It's a long journey, challenging journey, right? You need to have someone who also complements in terms of the skill set, but also kind of can be there, which ensures also the likelihood of the team to succeed. Do you have something like that? Like when you see, like
Yeah,
it
yeah.
is a red flag from the get go.
I know, absolutely. There is a couple of red flags and non-starters, and we call it sometimes the bus test. And
Hmm.
that sounds a bit cruel, but if there's in read, everything depends on a single person in a company, and God forbid that person falls under the bus. What happens to the company? Is it going to survive without that person? And if the answer is no, that for us is a sort of a single point failure that we would avoid to invest. So if otherwise the company is interesting, we would encourage afterwards the founder to sort of build a solid management structure around him or her. And that would then sort of, mitigate that risk. Other elements that we're looking at is customer concentration. So if you have, for instance, a situation where the success depends on one or two customers only, if one of these customers breaks away, what happens then? Is then, the company out of business? So that dependency is important. If technology is too niche, then I think that would be also a concern for us. So if the market actually cannot scale because of the technology being too small, and then maybe last but not least, it becomes a more important topic is different aspects of ESG. So it could be environmental aspects or social aspects or governance aspects that we would consider. So, for instance, if we would see investors that are sanctioned, of course, we would not become a co-investor. Or if we would have a business that pollutes in producing things, that would be a non-starter. Or, I mean, there's a lot of discussion in space about dual use technology. So it can be applied for commercial use, but also for military use. We are relatively relaxed there as long as that technology is not used for any offensive or aggressive means. So we would not help to build missiles or something like that, because you could say that you can also use for commercial uses. But for instance, if it's I don't know, countermeasure product or a technology that is used for communication or Earth observation, then I think we're much more relaxed about that.
And you kind of touched upon, I think, an important point. From what I understood, and correct me if I'm wrong, there is a little bit of wiggle room. What I mean is that if you see a potential in a scale up that asks for funding, right?
Hmm.
But not everything is perfect, but they have the core components that you're looking for. You are willing to kind of give them the space to fix those shortcomings. Am I
Yeah.
right? Am I correct?
Yeah, that could sometimes be done through contractual means that you say, well, what possibility would you have? You could say, I only invest partially and then you have to fix things. If you don't fix things, I want my money back, or I will only invest more money if you have really fixed these issues. Or you could sort of define an action plan that the company has to work on. So there is means of doing that. I must say, practically speaking, probably takes a few discussions and you will see if people are willing to actually find a way or not. So that's almost like a go or no go situation. And I had situations where you would get the lip service, but you would not get the commitment, so to say. And you can sense that after a while. You have 2, 3 discussions and you sense that actually the counterparty is only promising you to do things but actually has no intention to do so. Then I think you'll never find this. So it's a very intangible thing. It's emotional, it's interpersonal relationship that you either feel or don't. And I think that's extremely important for us, because once we invest into a company, we are also as an investor committed to that company, and we want to make them succeed. Making them succeed means you have to engage, you have to discuss, you have to work together. If that is not there right from the beginning, I see difficulties that this will ever be there. And so I would rather turn it the other way around. It can always go sour after a while. Relationships can go sour, but if they're sour in the beginning, you better don't start.
Indeed, it's so important to have this. I don't know what is the better way to describe it, rather than just to say kind of personal chemistry, right?
Yeah.
That you need to have with the person, especially because it is what, like at least 5, 10 years, I guess, depending on the case. How long is the
Yeah.
average relationship?
Yeah. I mean, now in our case, we haven't faced that yet, but
Yeah, you are still
yeah,
new.
we're still new. We're still investing, but yeah, it's probably a 4 to 5 years relationship that you have. And so I think you better be ready for that.
Indeed. And since you work a lot with startups, either as an investor, in the case of Scaleups, you invest in Scaleups, but you also have a lot of experience working with startups, either as a coach. You were a coach at Fit for Start, for example. You are also advisor, board member in a lot of startups. You have this, I would call it, unique and outsider perspective, right? Someone from outside looking in, which is, I think, is so important, because when you are inside, you don't see a lot of the things that you should see, right? You have
Yeah.
a lot more blind spots.
Yeah.
So in your experience, what are the things that you think a lot of startups are struggling with or they lack, but you think it's important for their success?
Yeah, so maybe it's a little bit specific to the space sector. Can't judge it for others, but for the space sector, very often it's technology driven. So people are who start a business are engineers. They have had an experience over time where they have identified a technology gap that they think they can exploit or explore. And they sort of get caught almost like in a tunnel vision about finding a solution to their technology problem, which makes them very supply driven rather than demand driven. And the experience I've made in the coaching session, it's extremely hard to get them out of that thinking, this framework, to say you should think demand driven. Go and talk to your customers or potential customers. Get proof points that you're right, or get even proof points that you're wrong. It doesn't matter. So there's a sort of a fixation of that they are solving the world's problem when maybe actually there's nobody is looking for that solution. And it's somehow understandable because you have to have this commitment. I mentioned it in the beginning. You have to have this commitment, this perseverance to keep going. And I always imagine if you have worked for maybe 6 months, 12 months, or even longer on solving a technical problem, you convince yourself that this is the best thing since sliced bread. And you have to somehow be critical with yourself. And that's difficult. It's very difficult. But when we go to the startup program, when I was a coach, that was actually the hardest bit. Once you got over that, sort of this customer discovery, moving from supply to demand driven thinking, once you're over that, then things get easier. But it's very hard to get over that. And that brings me maybe to the second point, which is sort of the unbalance between technology innovation and business innovation. So people think about the product, about the technical solution, what the capabilities are of that product, but how to bring that to the market, how to sell it is another sort of area that is usually left for too late. And I would wish that this comes sort of together. Technology and market should come together. And then maybe the last thing I would mention is, and maybe it's quite natural, but people they live from day to day in that early stage. But I think what they need to do is to start thinking early on about how they actually want to run that business ultimately. What are their requirements? What are their needs in terms of structure? What capabilities do they need beyond the technical capabilities? They need salespeople, they need operations, they need production, they need legal people, they need finance people. Then you have to decide, is that outsourced? Is it insourced? When is the right moment to build that up? But already when you start, you should think about where that goes. Because otherwise you might find yourself in building an operational structure or a business that you have to completely turn upside down after 2 years. Now, things always change. That's clear. But just think about it early enough that you don't sort of get yourself into a dead end from an operational point of view.
Exactly. I mean, I think it's important for any person, professional, but especially so for a business, right? To have that clear vision of where you are heading. And how you get there might change. Maybe the vision itself might also evolve, hopefully, after you have considered your
Yes,
customer needs, right? But I think it is so crucial to have that kind of North Star to guide you.
indeed.
Things going to be very challenging otherwise.
Yeah, yeah, absolutely.
And talking about the startups, what makes you feel optimistic about the future of startups here in Luxembourg, Europe, or in general? And conversely, what aspects of the ecosystem discourage you?
Yeah, yeah. Well, first of all, I think again I can only talk about the space ecosystem, but I was just this week in Space Tech in Bremen, which is a 3 day conference and an exhibition, and there were like 700 exhibitors, very motivated, very excited about the space sector. You also see that convergence happening between maybe more established companies and what you would call the new space sector, which were sort of two separate environments, ecosystems. They start to converge. They start to converge in terms of the businesses. They start to converge in terms of the people. For instance, I met this week a lot more people than that I knew than maybe 2 years ago when I went to that same event. And it's simply because people that have been in the space sector for many years all of a sudden see interest actually in new space companies and start to work there and help grow the business. So that's all very exciting and interesting. Startups find fertile grounds. I mean, there's also public funding there, there's a growing market, there's public interest. So opportunities are plentiful, right? This is important. I think on the challenging side, it's, and I'm maybe here talking more about Europe than maybe less so in North America. There's still a lot of administrative hurdles that startups have to go through. Public funding creates opportunities, but also complacency. So if you start to depend on public funding, you say, well, why should I make the effort and going the extra mile to actually make a commercial business out of that? I just call up my local agency and get some more funds, and I can continue my lifestyle business, and everybody's happy. That's maybe fine for an individual, but I think in terms of the overall ecosystem in Europe, that doesn't help. There is, I think, New Space Capital is probably one of the few in Europe that do scale up fundings. So companies will find a sort of a valley of death after they have done their initial phase of development, and before they can get corporate funding or private equity funding, they should get scale up funding. And that's actually not that easy to get by. So people then get stuck. They either stop growing, stagnating, or they give up altogether, or they go somewhere else. So
Yeah.
that happens. They also go to North America because I think there's more funds, more fertile grounds. And it's unfortunate for Europe because then, Europe has done the hard work of getting them to a certain stage, and then they leave. And that's something we should avoid. So that's why we're here for for scale up. And then maybe the last thing I would say is we mentioned it in the very beginning. Failure needs to be part of the journey. There is probably sort of a legal framework also in Europe that sort of is very risk averse. When I compare that to North America, where companies go bust and then the founder declares bankruptcy on Friday and on Monday he starts another business, and nobody cares. That's part of the journey. In Europe, you're almost like tarred and feathered, and you're doomed almost as an entrepreneur. So that makes people much more risk averse. They don't dare to actually go a little bit beyond because they know there's dear consequences. And I think that's something, that needs to change. There needs to be an element of failure as part of the learning curve. And I think that's something I would encourage really.
Indeed. I mean, yeah, more kind of normalization of failure, I think would be very, very beneficial for startup sector in Europe in particular, right? And I think The other element I personally see often is also, I don't know, this is hesitation of doing sales or putting sales and talking to customers almost to the second, as a second priority,
Mhm.
whereas in US that's the priority, right? And I think because they don't think of customer first, focusing on more of a kind of finding a perfect technical solution, right? The
Exactly.
solution for whose problem. And I think that also then maybe encourages them to look for public funding, which can create this dependency and can also postpone actually going really with full force to commercialize your business. Well, we are reaching the end, Daniel, but there's
Okay.
one other question I want to ask you.
Hmm.
This question was left by my previous guest. They left this question without knowing who they're leaving it for. And the question reads, and I think it's kind of like also an interesting and relevant to you. How do you approach the balance between innovation and market demand, especially when your ideas push boundaries? Maybe you can speak from the investor's point of view, right? Obviously, this person is an entrepreneur and was wondering as an entrepreneur, but yeah.
Well, I think it ties a little bit back to what I mentioned before about the balance between technology innovation and market innovation. Almost from the way the question was formulated, I have the
Person is struggling
impression
with it.
I have the impression that the term innovation is occupied.
Hmm.
It means technology. And actually would say I would like to see more innovation, the term innovation be related to markets, to products, to how do I serve the market? What business models do I use? For me, technology is an enabler. It's not a means in itself. As I said before, it's a necessary thing, a right to play, but it doesn't give you the right to win. And I think that's something that I would like to see more often, that people start to think more in terms of when they think about innovation, about how do I serve actually a customer or a need of a government or of an ecosystem. And then the question of boundary is almost secondary, because pushing the boundaries is almost part of the game. That's what it should be all about. For us, this is actually a criteria when we invest also. We discussed that before, but for me, if you're not pushing the boundary, if you're not solving a fundamental problem that exists in the market, it would be difficult for you to actually succeed and stand out. And so that's an attribute I'm looking for when I'm investing, that you stand out from the pack. And it relates back to what we just discussed before about the risk taking and being afraid of failure. So, push the boundaries. I think this is a good thing. I would even say be maybe more risk averse on technology and be less risk averse on market and boundaries.
Great. Well, thank you, Daniel. This was such a wonderful, wide ranging, insightful conversation. I loved hearing your insights and also optimism, both in general about the space sector, but also about the startup ecosystem. And you have also touched upon on very important topics, especially for our policymakers in Europe, right? What makes Europe lag behind countries like US, for example, when it comes to startup and innovation and entrepreneurship? There's a lot of this administrative lag, risk averse kind of like even policies, right? So in Luxembourg, we have this, if you fail once, you file bankruptcy. It's very difficult to go back and try to
Get a
do
second
it.
chance. Yeah,
Yeah, they are, I think, at the moment looking, reconsidering it at least to give another chance, which would be great. I think at the core, it's so important for, from what I hear you share, for startups to take risks, but also risks in terms of especially going, pushing their comfort zone, talking to customers, identifying a real problem that really matters for them and focusing on that rather than building a solution and trying to push it into the market. And I
absolutely.
think from the policy perspective, you also highlighted the importance of creating an enabling environment both in Luxembourg, but also in broader Europe. So entrepreneurs can take risks, not be afraid of failing. They know someone has their back, right? And also make the process a lot easier. And also, thank you for sharing insights from your own investment strategies at New Space Capital. What are the elements that you look into? Hopefully, this also gives a little bit of insights into startups and scale up founders who want to raise. So, thank you,
Absolutely.
Daniel.
My pleasure. Glad to be here.